Hello guys and welcome to Daily Market Movements. Welcome to another episode of Indice Watch. In today's video we're going to be looking at the NASDAQ 100 followed by the S&P 500. So in front of me, let's start off with the NASDAQ 100. NASDAQ 100 currently trading on its fourth red day in a row. We've just broken below 16,400 but of course we still have 2 hours to go until the US markets officially open, so anything can happen. It's still really early in the day, but you know, we are on the last trading session of the year 2021. What a year it has been. Let's just reflect a little bit here for the NASDAQ 100. Let's see how far we have risen since we started the year. So this was of course the first trading session, and up till date we've risen roughly 30.66%. so it really has been a fantastic, well, actually, if I should put it up there, really, that's where we started. So we're up around 28%, and at the highs, we were as high as 31.24%. So it really has been, yet again, another blockbuster year for the NASDAQ 100 futures. I think the S&P 500 has been the index that's risen the most, and we're going to go and have a look at the S&P 500 in a few moments' time. But, you know, it's been a great year for investors, amazing year for CEOs and companies, and, of course, a great year for consumers, because as technology continues to improve, we're seeing it in certain sectors, like, you know, just one sector to use as an example is the EVs. You know, the likes of Tesla, for example. We had the Tesla join the NASDAQ 100 this year, and what a company that is. You know, there's just so much innovation at this moment in time. You have the likes of NVIDIA and AMD when it comes to the semiconductors, just coming out with these super chips. There's talks of the metaverse. So when you reflect on 2021, I think it will be a very large pivotal year when we move forward. So I love this index. For those who know me, NASDAQ 100 is by far my favorite index out of the Dow Jones 30, the S&P 500 and the NASDAQ 100. I think it's the most exciting index because of, you know, it's a basket of stocks, and I personally believe it has the most exciting and the largest companies in the world, the likes of Microsoft, Apple, NVIDIA, AMD, Tesla, you name it, several trillion-dollar companies, Netflix, Google. So I really do have big and high expectations as we go into 2022. But 2022 is going to be a different year, and that's why, you know, I wanted to come onto YouTube today and just let you all know my perspectives as we go into the new trading year. Now 2022 is going to be a lot different to 2021. We have the tapering process of $120 billion, which is going to be slowly unwinding. Well, I say slowly, it's actually just been announced it's going to be accelerated, so I don't think slowly is the right word, but it's going to start to unwind, and that's expected to end by March 2022. And then that's where the real test comes here for the stock market. Can the stock market stand on its own 2 feet? And my assumption would be yes. We are going to get a rate hike. That's where, you know, you can easily expect to see some volatility in the market, whether that be to the upside or the downside. I think that we would probably consolidate and maybe tread down a little bit, but, you know, that's understandable. When you look at the market from this perspective, you know, since those March lows, we have rallied a significant 145%. So let's say the market falls down 5 or 10% to start off the year of 2022. I'm not saying that that's going to happen, but even if we did fall, let's say 10%, that takes us down towards a 200-day EMA. And investors can look at that and say, well, okay, well, off the March lows, we're still up 122%. So it's very important not to get too invested up at these high levels. I've actually drew a full extension Fibonacci retracement zone, and, you know, we have up until about 20,000 here for the NASDAQ 100, and that's where I really will start to put the brakes on in my investing, because as we all know, the full extension Fibonacci zone typically you know, indicates the top of a market bubble, and you know, we are fast approaching that level. I think, you know, we are pretty good up until we get to around 17,931, but, you know, we're just below that 17,000 area as we currently speak. So I still believe that the NASDAQ 100 has some way to go, but I really do believe once we get above 17,000, which I do believe will happen within Q1 2022, that's where things will start to get a lot more volatile, a lot more interesting once the Fed comes in and starts to hike the interest rates. But medium to longer term, this actually does have a positive effect on companies, on tech companies, on high growth companies, I should say. You know, it's historically proven after, you know, years and years of, or decades and decades of research. So again, I really do like the NASDAQ 100 going into 2022. I do not expect the same level of growth that we saw in 2021 and 2020. The market cannot continue to accelerate at this current speed. But even if we do see a consolidation and we end 2022 in the green, which is my my prediction, that should be seen as a positive. If we can just consolidate around these high levels and digest these massive gains that have occurred and don't give it all back, that should be seen as a huge positive. So let's just zoom in from a shorter term perspective here for the NASDAQ 100. So as I mentioned at the start of today's video, we're currently trading in the fourth red session of the year. Sorry, of the week. So that's 4 red sessions in a row. And to be honest with you, today I actually expect to finish the day in the red. We may see some strong buying as we go into the close, and the reason being is because typically speaking, historically speaking, the first trading session of the year is normally a fantastic session. It's very common to get gains of anywhere between 1 to 2% in the indices, and that's what I fully anticipate as we go into 2022. But on the other side of that, vice versa, is that on the last trading session of the year, you typically do see a red day, and we're already trading in the red, and I would not be shocked if we were down 0.5 to 1%, and that's hedge funds and banks closing out their positions so that they can then go and present their portfolios to their clients and say, well, look, John, I've made 30% on your cash this year. Please give me more money so that in 2022 I can make you more money. And if John accepts, that's when typically speaking, January is a fantastic year for the stock market. It's historically one of the strongest years, and that's because clients are they're able to see the growth of their portfolio by the hedge funds and the banks, and they decide to reinject more capital. And then, of course, you've just got that reallocation of capital from the hedge funds and banks. When they close out in December 2021, they then have to go and reallocate that again or reopen the trades that they previously had as we kick off 2022. So what I'm trying to say here is that today's trading session, I would not be shocked if it ends in the reds, but going into next week on Monday, I am anticipating a very strong start to the month. Let's move over to the S&P 500. S&P 500 up at those all-time highs. We're around 4,800. It had a red trading session yesterday. Just like the NASDAQ 100, we're currently in the red pre-market, but anything can change. But again, I do fully anticipate us to finish in the red here during today's trading session. If we do finish in the green, we're doing fantastic. That's just a bonus. But it's all about Monday for me. Okay, I'm gonna get really excited as we go into next week. And as I just mentioned, typically speaking, the first trading session of January of the new year is typically a 1 to 2% gain. So I'm not saying it's going to happen this time around. It's not financial advice. I'm just telling you what history has shown. I think it happened in 2019, 2018, 2017. In 2020 it didn't, but of course we were kind of amongst COVID. But the previous 3 years we rallied around 1.5, 1.6 and 1.9%. That was the research that I did yesterday. So that is where I am going to leave this video. I just want to say thank you for everyone who has tuned in so far this year following my YouTube channel. I've had some of you now following my videos for nearly 2 years, and my channel is now officially 2 years old. So thank you very much for all of your support. I really do wish you a happy new year, and hopefully next year is the year where your trading really does start to accelerate. But thank you very much. It's been a fantastic year trading the S&P 500 and the NASDAQ 100. We've seen some fantastic gains. Let's just quickly look for the S&P 500 just to end this video to see how much we have rallied this year. As I mentioned, it's pretty a bit higher than the NASDAQ 100, so we're up around 29.34%. It really has been such a strong year for the US stock market, and hopefully this is just the start. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. How it works is really simple. We have 2 subscription plans. First one is a monthly fee of $19.99, and the second plan is only $209.99 for a year's subscription. Once subscribed, you'll then have access to all of our in-depth analysis videos, as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.